folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis without Wall Street hype. And as we always say, the charts tell the truth. So let's get into it. We had an ugly day on Wall Street, the Dow getting crushed about 315 points today, the Nasdaq getting nailed for 60 points, and the S&P just dropping about 37 across the board. So an ugly day on Wall Street, and it was a combination of multiple catalysts today we saw. We not only saw the dollar continuing to be weak and gold continuing to rise, but we saw some jitters across a possible failure of a bailout plan in dealing with some of these bond insurers and some of these banks. So you're seeing a multiple kind of cataclysmic effect as we see a lot of these facets come together. A bunch of these different issues that the market's had over the past 2 months since the January lows are now all of a sudden not looking as good as we were hoping, and that's spooking the markets. So across the board, this is what we're seeing today, and I want to get into the charts right away to do as much as we can on the technical side of what's going on. Now, as we look at the intraday ES, and again, this is the ES futures, the E-mini contract, we just see a constant sell all day. There's really nothing else to be said here on the intraday chart. There's not a lot of patterns across the board, just a constant sell. And you can see here, ever since early in the morning, and you can see this is 4 a.m. Eastern Time, it was just a downward slope. And I'm just going to draw this line, and you guys can see how we just held this line the whole day. Yes, we bounced here and there, as you can see here, but ultimately we just stayed around this sell-off line and continued down all the way. We did see some short covering coming into the close here. As you can see, a nice strong candle. Really the strongest green push-up here of the day came in the last 10 minutes of the day as the market saw some short covering, and that's common. Anytime you have a hard sell-off of this proportion, especially on a Friday, people will take profits off their short plays, which is forced buying, thus the market moves up. So keep that in mind. Now, in general, across the board today, just an ugly day, as I mentioned. Now, I want to look at the Nasdaq because as we get into these different charts, there's a bunch of different characteristics I want to look at. We're going to focus on the daily charts more than anything today because this is where we're going to get into this possible breakdown. Now, you guys know our stance has been lately. We called the rally, the last two rallies in the market, which were about 3 days each, 3 to 4 days each, of a constant push-up, and we did look for a pullback over the last few days, and this was, to be honest, this was more than we expected. I'll be flat out and honest here, folks. We did expect another pullback today, as we had been calling for the last couple days, and we did get it. This was much more extreme than we expected, but it is what it is, as we say here in New York, and what you're going to see here is a possible breakdown, and this is a very bearish candle on the daily, and I'm going to show you why. Take a look at this line as I draw my trend line in. Alright, we draw it to the low, and this is how you draw trend lines, folks. You connect the low of the candle here to the low of the candle here and draw it straight up. Now you can see that one day here where we dipped below that trend line, but they saved it. This is the day we rallied, showing us a nice little bottom in the market before the 3-day rally that followed. Alright, but look at the chart today. To me, that looks like a possible breakdown coming, and we need to really focus on that now. Alright, ultimately you're watching for the February low on the Nasdaq here, and I'm going to draw that line. We're still holding that low, and this low is key as of now, so keep that in mind. This low is going to be absolutely key when we have to hold this line, otherwise we're going to January lows, and ultimately we're going lower. Now you guys know our stance. Our stance has been, yes, we maybe see a small push here and there, but ultimately we are going much lower in this market, as I do think the market needs to be down 20+%, possibly upwards of 30%, before we see the bottom come in. Now there are a lot of factors out there that are going to change things, and there, overall we probably will see the market inching down to -20 to -30 from the highs in at the end of last year. But what I do want to focus in on here is that we have government and Fed intervention at every turn. That is always a possibility. And you guys know what can happen in that situation. You can have a major short squeeze, you can have a major buying program, the PPT can come out of the woodwork and spike the markets up, so you have to be careful. Now ultimately, again, as I mentioned, this is an ugly daily candle here, which is a possible breakdown. What we're going to watch for on Monday is confirmation. Do we see a second candle down, and do we touch the support line? Because February's low will be support right here where I'm pointing, and on the Nasdaq that's about 2248, give or take a point. So right around that 2250 mark on the Nasdaq is going to be support from February's low, and then what we're going to watch for is, do we close below that? A close below that in this area right below, and you will possibly see a move to the January lows, and then obviously we'll watch for breakdown patterns for a break of January lows, and then we'll have to start looking at the larger picture, possibly the weekly chart. And then just let me flip to the weekly chart so we can kind of look in on this. it's always fun to look at the weekly chart and see a broader picture. And here you can see the weekly chart. So you can see almost a head and shoulders pattern, and we pointed this out towards the end of the year and at the beginning of January that this formation was happening. So let's take a look. You see the head and shoulders on the weekly here. Head is right in the middle here. You have a shoulder, head, and shoulder pattern, which notoriously is a bearish pattern. And we can see what happened in this situation. Take a look at this breakdown right here. Alright, you basically have a line drawn right there. You can even draw a bigger trend line right in this area here, and you can see a better breakdown. Notice the break here on the chart coming right through, and look at the sell-off that ensued. Now we all know that you could also look at this as a possible M pattern here as well. It's a little sloppier on the M pattern side of things, but nonetheless you could look at it that way, and you could look at it this little bounce, a 2-week bounce here on the weekly before another leg down. So we are watching this pattern as well form here, and we saw a little bit of a bounce, but we're still on the way down. So keep a close eye on this as well as we continue to watch the weekly patterns. Now I want to look at the SPY here as well. The SPY weekly, almost the same, a little weaker over here, but it's been a little stronger on the upside now than the NASDAQ. And the NASDAQ continues to be the weaker of the indexes, although financials today did get crushed. Financials again took a big hit because the rumors out there are that some of these bailouts may not come to fruition. And if that doesn't happen, you're going to see some of these banks and mortgage players and bond insurers, you name it, they have their hand in any of these derivative products. They're going to go under. Alright, not all of them, but the smaller ones, the weaker ones, the ones that aren't going to get funding, the ones that don't get bailed out by any bailout plans will ultimately go under, and that will cause a lot of panic out there. Alright, keep that in close mind. Now notice again here that since the fall in January, we've been on a declining pattern of volume. Alright, and this is the weekly again. And the reason why I like this is because when you see lighter volume on a move up, it usually signals another move coming down. So now look at the last week here. This is the weekly for this week. Notice the volume. It's the biggest volume candle here we've had in about 2 weeks. Alright, and again, we had a pretty big sell-off today that had quite a bit of volume out there. Just to do a quick analysis here, we saw 2.3 million in volume today on the ES. That's contracts, and that's very, very high. Now I want to flip back to the daily here on the ES and on the SPY to just go over a couple other things here. Now again, we're focusing in on the ES here, and you can see that from the lows, you have that nice pattern formation here, which looks like it may be at a near-term breakdown. You can either take that line, or if you want to react somewhere like this, notice this support. Okay, you take the low here, connect it right across, you could be looking at a little support right in this area, which coincides with February's lows. So definitely watch for that level on the ES, and that level on the ES appears to be approximately 13.18, give or take. Alright, so keep a close eye on that level. Now let's quickly focus on the SPY before we get going for the weekend. And here again, you can see that this is a definite breakdown or apparent breakdown, though on the SPY it's not as pure and simple as the NASDAQ. Notice this. You have today's lows matching up with the low here, matching up with the general support area from February. So we're right here lying in this general support area where you got to see whether or not we break, okay? And that's what I'm talking about, confirmation, because don't think that they can't come out with news. Don't think the government can't come out with a bailout plan or the Fed come out and lower interest rates come Monday and you see a near-term spike. And again, I say near-term because ultimately it's going back lower. It's just a matter of you don't want to jump on the short side, only to get whipsawed back on the way up. So again, watch this key support on the SPY. Definite solid support right here, right with this low, and right with the low of today. If we close down here on Monday or anywhere down here below February's low, and again you'd have to close somewhere in this realm right below here, then you'd be looking at a major sell-off all the way down to January lows. So it's all on the downside now, folks, that I'm looking. Today's chart action was very, very bearish. Constant selling all day. It was not enough to cause me to think it's capitulation, which means you still have more downside. There was no real panic. Yes, it was an ugly day, but we've had a nice move up now, so we're really just going back to the lows from a week ago, and so you don't really see the same panic in the markets as if we had sold off, for the last 5 days, and then we had another 3% move down today. Alright, that would cause panic, and that's what you want to see before the market can bounce again. We have to see that. So this is all psychology based again, is that you want to start looking for people to become too bearish. You want to start looking for panic. You want to start looking for chart patterns and time and volume. And then once we get that in the markets, whether it's at January lows or February lows or even lower, we can start to look for possible setups for a move up. Keep a close eye. Again, we have to look for confirmation. I'm not sold on this market dropping too much yet. I think there is a lot of bears out there still, and it wouldn't shock me to see a bounce up. All right, be safe, guys. Be careful. Have a wonderful weekend. We'll talk to you again on Monday. Take care.